morning, good afternoon, good evening, traders from across the globe, and welcome to the 839th edition of Short-Term Trading Live with Oscar. My name's Oscar Carboni, and I grew up down in the pits on Wall Street, learning tips, tricks, and techniques from the old pros on how to gauge market movement, and I readily share these tips with you each night in our YouTube presentations. Traders, as we know, futures trading can be extremely risky and can cause substantial financial loss. Futures trading is not suitable for every trading account. If you do not recognize that a stop is your best friend, you certainly shouldn't be trading in the futures arena. For you cowboys out there that understand this game, boom, 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 shoot them in the air. You know what I'm talking about. Traders, we have a video for you. It is Tuesday. It is actually Monday night. This video is being filmed on Monday night for Trading Tuesday. That would be March 13th, 2012. First of all, on the board, a green OMNI for the ES, the NASDAQ, the DAX. You gotta love it, love it, love it. What is on the board? Traders, the NASDAQ leads the way higher. It's unequivocal. Look at any chart. Watch the action during the day. The NASDAQ is just pulling our U.S. indices higher, and it looks like that is going to continue. I gave you videos over the weekend, and in both of those videos, I showed you lots of charts, and in those charts, I expressed that NASDAQ is the leader, and NASDAQ would pull U.S. indices higher this week, and I have a feeling that's just what you're going to see on Tuesday. Let's take a look at some charts in a few moments. What else is on the board? Europe, or the DAX, really in particular, is just looking strong as well. And it looks like now that Europe finally knows what they're going to do with Greece, Europe is finally starting to look like it is doing slightly better. And watch the figures that come out of Europe in the next 3 to 6 weeks. You will see some changes for the upside. It is Fed Day, or FOMC, Federal Open Market Committee Day. That's when Bernanke and the crew get together and decide whether or not they're going to raise or lower interest rates. Traders, we know this. They're doing nothing with interest rates at this moment in time. They cannot lower them anymore. They're not ready to raise them. However, I do think that the rhetoric that comes out of the meetings going forward will slowly start gearing towards rates to be raised towards the end of this year. I do not think the Fed will have a chance to wait till next year. I think this year you will find the Fed will have to strike, and that's the rhetoric that we're going to start to hear. Maybe not after tomorrow's meeting, probably next month's meeting going forward, but we are day traders. We'll take that one day at a time. Another interesting thing about what I think is our U.S. economic recovery, chart-wise, we are absolutely having a recovery. Market-wise, the numbers are looking better from just about every sector out there. Traders, I'm about to go to New York City tomorrow. I will be working for the next 7 days from my New York City office. And here's what I wanted to mention about New York City. In the last 2 years, I've had about 15 people who absolutely touch my circle, between friends and family, back east, New York City. All 15 of those at some point have lost their jobs in the last 2 years. I am going back east tomorrow night. In the last 3 weeks, you know what has happened? Every single one of these people who have been out of work now have jobs. And I'm not talking about one sector. I knew people from banking straight across the spectrum, from banking to construction and some hospital, or I should say some medical in between. Every one of these people have gone back to work. So traders, it is slowly getting better. If they're going back to work in New York City, if I see them going back to work here in Vegas, I assure you they're starting to go back to work in your cities too. The country is beginning to heal. Traders, I have some charts that will absolutely show that to you. If you like the chart you're about to see, come on and join me at livewithoscar.com. Come to my free trading rooms where I give out recommendations and I teach you Omniacs how to view these charts and become better at technical analysis. Let's go look at some charts. Traders, does anybody recognize this chart? Let me see if I can jar some memories here. leading to the end of 2011, coming right into December. I put a chart before your eyes, and I said repetitive patterns are the cornerstones of accurate technical analysis. I showed you this chart. In this chart, you had a V bottom and you had this parallel channel filled in. Then we had a V bottom and the parallel channel filled in. When we came to the end of the year, we had a V bottom and this parallel channel was empty. I drew in an empty red parallel channel. Since the day I presented this to you on the weekly chart, this has filled in almost exactly as it did here, and that tells us we have at least 2 more months of upward movement before it reaches the end of the channel. We don't know if the channel stops there, but it's about as long as this channel and about as long as that channel if we get up here. Repetitive patterns, traders, are the cornerstones of accurate technical analysis. How can it be possible for me to put this in front of you the last week of 2011 when nothing was in these red lines? The chart ended right here with this V bottom, and I said, you will see this fill in the beginning of this year. It has filled in. That is accurate technical analysis. Go repetitive patterns. I know many of you remember this chart. It filled in like magic. Let's move forward. Let's look at today. Traders, NASDAQ on a weekly bar chart. This is a very, very bullish parallel channel that we are in. The NASDAQ on a weekly bar clearly leading the way. These were previous contract highs. Look how much further we have gotten past them. We are in a really smart parallel channel right here. This parallel channel looks like it's going to take us all the way up to this line. I think we will easily get there. That means we're going above 2,800 easily in the NASDAQ. This would be the June weekly NASDAQ. That looks fantastic. Let's look at the next chart. E-mini S&P, traders. These were previous highs. We just took them out from back here, set back in May of 2011, right before crude hit 114 a barrel, I'll remind you. We put these previous highs in the S&P, came smashing down. We have taken out those previous highs. We are sitting up here right now and in a really fantastic looking parallel channel. It's actually almost an Andrews pitchfork because it's got a medium line in the center that has been doing a great job making support. So we have a wonderful, fantastic parallel channel here looking like it wants to take the ES much higher. Now, traders, we go across the pond and look at the German DAX. Look at this market on the daily bar. Another wonderful parallel channel that we're sitting in right now. The DAX looks great. It's looked great ever since it bested the 200 bar moving average. And if you want to look at this, it looks like a little inverted head and shoulders building here. The DAX is pointing higher as well. Traders, these charts do not lie. Technical analysis and repetitive patterns are absolutely the cornerstones to accurate technical analysis. You are simply seeing the DAX repeat what the NASDAQ and the S&P has already done. Now the big market, the 30-year T-bonds. The Fed's having a meeting about this market tomorrow morning. It's Fed Day. Traders, this to me looks like a market that is running out of steam. As you can see, the lines are getting closer and closer, coming to some form of an apex. If you really take a better look at this, it looks like a big rounded top building here in bonds. And as you can see, we are building an apex, and usually when an apex gets close, that's when it breaks down. Well, let me show you another picture of the very same bond chart. It looks to me like it did come to a much more focused apex, and we are now breaking down below that apex. I think bonds are basically just about at the top of this cycle. We are almost ready to call official top here in the 30-year bond market. The OMNI doesn't want me to call it yet, but we are close to calling top. Close. It is not there yet, but we are close. Then, traders, takes us right back to where we began. Repetitive patterns are the cornerstones to accurate technical analysis. Here is living proof. Remember, nothing was filled in on this graph when I showed it to you except for 2 empty red bars. Look at how we filled in all the way to here. It'll look just like this and this when all is said and done. Traders, there is my technical argument for why we have the green omni on the board, for why we know for sure that repetitive patterns are absolutely the cornerstones of accurate technical analysis. You got to give technical analysis a round of applause here, traders. This stuff isn't magic. You see it before your eyes on the charts. You simply need to come on down to livewithoscar.com and allow me to teach you to open up your eyes to those charts and see that they are absolutely leading indicators. All right, traders, again, I'm off to New York City for the next 7 days. I kid you not, all of the people who cried the blues to me for the last 2.5 years that I left behind in New York City are now all back to work. I am sure not everyone you know is back to work, but I'm sure in your neighborhood too, you are seeing people as well go back to work. It doesn't all happen at once, but collectively, it certainly leads to pushing our recovery even higher. Traders, I'll see you at livewithoscar.com. Don't forget, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Yeah. Thank you so much for tuning in. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.